US stock rallied yesterday. Market is considering Fed to get off this 75 basis point emitting hamster wheel. Federal Reserve slowly but surely indicating that they will continue to raise interest rates, but they are open to slowing their tempo. The question is, can they find a way to do so while maintaining control of financial conditions and not cratering everything around? Today we are discovering new episode in terms of you will find out in terms of the updates regarding economy, indexes, crypto, and you will get to know how to avoid portfoliogenism. Portfoliogenism or portfoliogenism. So let's get into another episode. So at first, let's have a look at economy view. I will jump right over to the first slide for today. Are there any hints for those? So we can find that Fed is very often looking at the labor market data. Right now, we can hear voices from around the economy that there are many redundancies. So we had Credit Suisse issues, but it's mainly of the structural problems where they find they will be obliged to lay off many of Chinese workers, and recently we had Meta that decided to also lay off around 10,000 workers in the nearest future. Right now we have HP to cut up to 6,000 jobs over 3 years as PC demand falters. So right now these are just the particular cases. We can hear from here and there that those problems occur, but that doesn't reflect the data that we are finding in the labor reports. So this is the rating that seems stable, and it's important for now to look for labor market data for November and then any indication of whether this information is weakening or maybe this sustainability is weakening, that we may find that will be a I would say the yellow light and even the red for Fed to hike further at that pace. So we are very carefully with a high level of attention observing the data, as we know that the policy of Fed is literally data driven, and we need to find out what are the most important elements they literally pay attention to. So we can find that many of global workforce over the next few years in many companies will be laid off, and that's why we are somewhat expecting this to reflect on those gauges. So there are problems in a banking sector, in a PC sector, and also further problems around may spread and roll over the economy. Right now, however, let's have a look at inflation forecast for 2023 globally, and we can find that we are expecting mainly a highly elevated inflation around the globe. It's supposed to decrease, but to not that extent that we may say that inflation will be over and we'll get back to this downward trajectory of 2%. In 2023, there are not many options that may bring us down to those desirable levels. So central banks around the globe need to be committed when using their tools to put inflation on their level. And as we know, around 10%, 15% inflation rate is the one that we, as history shows, we will fight with for probably years. The higher inflation right now is, the longer it will stay with us, and the battle will be very difficult, as we are right now suffering those tech layoffs, mortgage rate adjustments, and a post-pandemic goods to services switch to that we need to still switch to digest. So that's why I do find that there will be much faster pivot than we literally expected. Right now, Fed is playing chicken with an economy and is on the collision path with that animal, I would say, but accounting conditions around may lose them a battle. So for now, I would expect the Fed to reconsider their approach, especially with the gauges that we can find right at this chart, where lending standards for large firms net tightening right now has literally skyrocketed. So there is plenty of pain coming down the economic pipeline, and that's something we finding as the real headwind for many of the environments. So that's on white lending standards for large firms, and that's on blue credit lines for small firms. All right, so we are jumping right now to market outlook, and what we got over there. On market outlook, we have this exactly chart. So what does it say to us? We are somewhere on the crossroads for the markets that still falters before decisively moving forward. Therefore, this chart comes with help for investors. So recently we had that case where HYG and JNK, that are one of the biggest high yield credit ETFs, both jumped around 3% right after inflation data being published. So that's the biggest jump since May of 2020, when you can find since April, that was April 2020. So right here you can find post-inflation data published on 11th of November, and that spike was really astonishing. So the weaker than expected inflation ratings raised hopes for us, for investors, that Federal Reserve will be able to ease off and stop this relentless monetary tightening campaign. So that's definitely what we need to take in consideration in terms of investments. So the strength of the flows could be an important indicator for where markets go from here. dominant power of the market is at the bulls side right now, as we had the spike and right now not finding any type of signs of a sell-off and a contradictory behavior. So markets living and breathing with this probability of soft landing euphoria, and my take is don't fight the impulse. All right, so crypto outlook, your favorite topic recently, as it's happening over there that much that many of even no writers may write the not very short book. So Grayscale insolvent, that's the question that I have posed, and why did I dare to do this? So recently we had this issue with Genesis. Genesis is one of that many firms caught up in the collapse of this FTX Bahama-based exchange. So Genesis decided to freeze its withdrawals and stopped functioning for some time. Right now, however, Genesis, even if suffering from problems as they had liabilities in FTX, right now they are denying imminent plans to file for bankruptcy. They claim that they have constructive conversation with creditors that may bring some things to light. So we are still awaiting. The market is still in a awaitance phase, and that's why we had this consolidation on the market, where we are still some kind expecting that that might be just a nightmare, just a temporary nightmare, and we recover at least in December, and all the fat will be over. So what will be the outcome of that, we may yet to see. Now, however, I would like to throw up the case of Grayscale. So the owner of the company is Digital Currency Group, founded by Barry Silbert, that had a liability of $575 million in Genesis. So that's why we can find that Grayscale is one of the elements of this falling apart puzzle that may been broken. So that's why recently the panic sparked by community demanded from Grayscale proof of reserve. That's a file to justify solvency. POR, that very often abbreviation is used in crypto jargon, uses cryptographic proofs, checks the ownership of public wallet addresses and so on, in order to not evolve any type of third-party entities. So this POR is highly demanded by the community, as it's normal. It's very anxious about the future of the company. Also, I would like to look forward. Also take the broader picture of the issue. As a reminder, Coinbase, largest exchange of cryptocurrency market, holds 635 BTC on behalf of Grayscale. So any problem to this company may ignite real avalanche here and there. Coinbase custody did say that Grayscale's asset can be confirmed on-chain. So why refuse to publish the address as part of its proof of reserve? For me, those concerns are enough reason to circumvent even complex security and deliver those elements. If you ask me if I had my savings at this place, I would also require for such document. So right now there are many questions yet to be answered. Blockrevision will keep you updated on the issue, so subscribe to the channel. I would like to add up a few cents at the end. Considering fact is that frauds on that scale, as it was with FTX, are very often revealed near bottom of particular cycle. The flash out that we are seeing now says that the crypto bust will be over sometime, possibly early next year. That's why if you are a long-term thinker and trying to make this far-fetched projections, you might be kind of cheerful that those problems are almost over. The next element is what were exactly the projections in the beginning of a year. So if you had bought cryptocurrency into the bullish expectations behind cryptocurrency related stocks, then those forecasts may look like pipe dreams for you. Just have a look. Return needed to hit average analyst price target from January 1. Right now, Stronghold Digital, it's around 6,000% Mogo, 2,000 Riot Blockchain, 1,500 Marathon, over 1,000. Those figures are absolutely off the mark. Right now, we can find that there are many disgusted investors that have probably lost kind of a much percentage of savings. That's why I do find that this crypto cycle is very close to the bottom. Amount of the entities and investors that are suffering is really astounding. So also for the Coinbase, just look at the Coinbase. It needs to rally a staggering 700, around 700-800% from the current level in order to reach the average 12-month analyst price target. So we can find that as we are just going through the crypto winter, and new price targets should reflect reduced estimates for digital asset customer deposit, considering the aftermath of the collapse of FTX. So also you can somewhat compare different forecasters, working out why they are different and what that they say about the economy and crypto, and even about the stocks valuations, but they never have a grasp of what may come to the industry in next 6 to 12 months. There are too many variables. Events as Luna collapse, FTX collapse, war in Ukraine, consecutive strike of hiking interest rates, in any of those could make the world look very different to forecasts today. So my tip is for you: become an independent thinker. Don't listen to forecasts. The best forecaster for me is sentiment. And at the time of low sentiment, you can buy those cheap companies and cryptos as well. So the only thing you need to know is how to prepare this fundamental analysis and take a grasp of technical analysis to know what to buy and when to buy. So let me please, let me know on chat or in the comments below. How do you think these elevations may be, or do you think ever those elevations may be brought over? So for me, it's a hard nut to crack, but there are many investors that finding that may happen as quickly as it rose. Even taking in consideration that political circumstances are and economical circumstances are much of a different. So let's have a look at market movers eventually. What we got for today. And we are jumping to our beautiful calendar. On Wednesday, we had, or maybe just let's make it with a entire week. Wednesday. But let's have a look at Tuesday at first. We had some speeches, and yes, we had RBNZ interest rate decision, and 0.75 was on the table. So it's very interesting what the Fed will do. But we have remembered that Canadian central bank was opting 0.5. That's why I find it more and more entities are bending into weaker hikes, but there are some that still keeping this 0.75. But New Zealand maybe not suffered that as it was back with US and Europe. Let's have a look at Wednesday PMIs. As you can find it everywhere below 50ish. That's out of the Europe. On the US side, 1 second. Let's have it with 2 stars. I don't know why that it does switch automatically. On Wednesday we had already initial jobless claims. That's one that is even higher than previous one. So we can find that mainly this labor market is steadily in a good condition. But we can find this tendency for unemployment benefits is rising. So we can find that there are some headwinds that right now occurring on this chart, and that's why we need to be bothered about the condition of the economy. Right here, let's have a look at what we got next. Building permits. Yeah, let's have a look at housing market. Oh, that's slumping. So that's another case that is faltering, and we can find that this bull tendency is extinguishing. So that's we have broken very significantly these 2021's lows, and right now heading towards those sentiment of pre-pandemic years. So that was those elements. PMI, yes. So we are still awaiting for PMIs from US. That will be also very important, and the market is expecting this one to collapse and maintain below 50ish levels. So very important for today will be FOMC minutes. That's why if you are interested in the economy or the markets, you may watch this also carefully. Today at 3 p.m. we will know what's up on this meeting. So without any further ado, let's jump into a trade idea. So what we got today in terms of trade idea, let's have a look at charts. In terms of charts, my proposition for you is this natural gas that I would expect to collapse anytime soon, as we are encountering a very important. That's this is natural gas in a enlarged window. Natural gas that right now is going through the roof. Recently, we had resistances right back at 7.5 and around 8. Right now, we are delivering this 0.02 node. I would like to at first have a look at our important data of COT. Let me find out what's happening over there. No. All right, natural gas. For December, what we got right here. Commitment of traders. You can find, oh, maybe I enlarged, sorry, I'm reverting from this. So we can find that commercials are already reverting from that valuations. However, we need to be very cautious, as we could find that commercials were also backtracking from natural gas before this March growth. So commercials tend to have cautious approach, but they are very often to skipping those I would say this euphoric moments on the markets, where those valuations and those growths are usually the biggest. So that's why commercials have literally sold many of their positions around where those valuations has come to and risen in that pace, as it was back in March, where we had much of a growth of natural gas. That's why right now we can read out that we are kind of overvalued, but it doesn't mean we cannot go any further. So we can find that those commercials are decreasing, whereas as small speculators are rising. That's very often a presage of a upcoming reverse. We haven't had that spike of small speculators back in March. That's why I do find that that's more likely to revert anytime soon, rather than having this rally to continue. That's why I would seek out any type of reversal formations right at this peak. It may go even to 8.1 and 8.2, but I do find that this rally is somewhat extinguishing. So natural gas, yeah. For today, I cannot find the exact levels where it will bend, but FOMC minutes meeting might be the one that will stop the rally for some time. That's why I would watch today at 3 p.m. the behavior of this market, and that's why I will hang on for any positioning on this asset for now. All right, so it's look like we are already through. We are already through with our episode. So thank you very much for tuning in, and as always, if you enjoyed, hit the like button and let me know right, so among the comments below the video, that's a possibly a bot. I don't know what has happened, but that's probably a bot one of a dating app. That's very funny. So okay, now I will try to just, I don't know, maybe remove that account out of my account. But if you have any questions not related to dating, just put it in the comments section below the video, or and I will get back to them in the next episode. Thank you very much for watching. Have a happy Thanksgiving. Tomorrow I will not record. I'll be not recording. That's why we are seeing each other on Friday. Thank you very much once again, and see you there.